Okay, good afternoon, ladies and gentlemen. Welcome to this week's weekly market review. As you can see at the opening slide over here, and you may be wondering, why am I starting the show today? Because Benjamin is on his break, and we have a new, or me, myself, I have a new partner in crime, and you also have a new SIAS speaker that will be joining us today, and that is Mr. Gerald Wong. Mr. Gerald, how is your weekend?
It was very good. I guess all of us had a long weekend. So getting very excited about being able to share with everyone today about what the next week is going to be shaping up like for the markets.
Okay, so I think without further ado, I'll let Gerald take over the control of the slides and let him share his content with you, which will be very insightful. And at the end of it, when Mr. Gerald pass over the time to me, I will cover the technical analysis of the indices in the Asia and the US market. Over to you, Gerald.
Okay, thanks so much, Sunny. So hi everyone. My name is Gerald. Very happy to be here today with you guys to be able to share a bit about how the Singapore market is doing, how the global market is doing. Hopefully through this sharing, you'll be able to get a better idea about what is happening in the markets and be able to make a better financial decision. Okay, so as usual, we will start with the disclaimer. Today's session is for education purposes only. So while we'll be talking about specific markets, we'll be going into some specific stocks. It should not be taken to be financial advice in any way. Okay, so if you have any questions after today's session, we have a SIAS session that is coming up on the 13th of September. It is happening at 7 p.m., but this is exclusively for SIAS members only. So if there's something that you are interested in, do consider joining SIAS as a member. Okay, and if you find today's session useful, do leave us a review on Google. So it is my first time doing this webinar today. Hopefully you'll be able to give us some feedback as well, either on Google or if you're watching this on Facebook, do leave us some comments in the comment section as well. Okay, earlier I spoke about SIAS membership. If you're wondering how much does that cost, it is just for $12 per year or $1 per month. So as Ben would always used to say, this is less than a cup of your coffee on a daily basis. But what you get to enjoy will be various investor education programs, including the monthly SIAS session. So do consider joining the SIAS membership if this is something that you find useful. Okay, so without further ado, I will start with a quick recap about what happened in the market in the past week. In Singapore, it was a short trading week because of the public holiday that we had on Friday. What we saw is that there was a strong rebound in the markets globally. The S&P 500 was up by 2.5%. Nasdaq saw an even stronger bounce of 3.2%. And in Singapore, we also saw a slight rebound in the market with the STI closing at 3,233, up about 1.3% for the week. Okay, so what is actually driving this bounce in the market? Okay, so what we will do next is to look at some of the macro factors that actually led to this strong performance in the previous week. Okay, so one of the key economic indicators that investors always keep a lookout for would actually be the US payroll data. Why is this important? Because the US is the largest economy in the world, and at the same time, the consumer sector is very important in driving the entire economy. So whether the unemployment rate is high, whether there are new jobs being created, those are all important indicators that are being tracked for investors to understand how the health of the economy is. So what we saw, and this is a number that has been talked about quite a bit in the media over the past weekend, is that the US unemployment rate actually rose in August to 3.8%. So if you look at this chart here, effectively, it is quite significantly higher than what we saw over the most of the past year. In January 2023 and April 2023, it went down to as low as 3.4%. And even in the previous high, that was in May of this year, it was only at 3.7%. So I think this was a number that led investors to think that, oh, there might be some form of slowdown in the economy. And as a result, what the Fed might do is that it will not hike interest rates as aggressively as before. So it is a bit of a reverse psychology at this point in time, in which bad news is actually now good news for the market, because investors are thinking that, okay, if the economy is not growing that strongly, what we will see is that the Fed will not hike the interest rates and can potentially start cutting the interest rates sooner rather than later. Okay, so I think this is the key takeaway that a lot of investors had from the non-farm payroll data last Friday. The other key indicator that a lot of investors were looking at is this wage growth data. Because if you recall, inflation is one of the key concerns of the market, and tightly linked to that is how quickly are wages growing in the US. Okay, the key reason for that is because if the wages are growing very strongly, what this means is that the inflation could be a bit more persistent, even if things like commodity prices have started to come down, because once the wages are going up, it may be harder for the wages to then come down subsequently. Okay, so all of us who are employees would probably know that very well. Once your wages go up, it's probably quite hard for it to come down subsequently. So I think that is why investors keep track of this wage growth data very closely, because effectively it tells us how sticky inflation actually is. So once again, the good news here is that the wage growth slowed to 0.2% in August. Once again, this is the lowest level of growth over the past 12 months, and giving investors further confidence that inflation might actually start to ease further, and we might once again not see the US Fed raising interest rates as much as what investors had expected before. Okay, so that is in the US. The other good news that we saw would be coming out of China. Sunny will go through the technical indicators later, but what I just want to briefly mention is that the Hang Seng Index actually rebounded with more support measures by the Chinese government. So if you look at the past week, we actually saw this very big bounce in the Hang Seng Index. One of the measures that you probably saw coming out would be the cut of the stamp duty on stock purchases. And this is the first time that the Chinese government has reinitiated this initiative once again after the previous global financial crisis. So this is once again seen as a sign that the Chinese government is coming to step in a bit to be supporting the market, to be coming in to revive the economy. If you've been following this weekly session, you will have known that the Chinese economy is one of the key risks to the global recovery thesis. So this is something that we continue to keep a very close lookout for. Okay, so coming back closer to home, we want to look at how the STI has actually performed. And earlier we saw that the STI saw slight gains of just above 1% in the past week. If you look at the top gainers, we have Wilmar up 6.5%, UL 4.1%, Capital Corp 3.6%, CapitaLand Investment 3.2%, and last but not least, Mapletree Industrial Trust at 3.1%. So fairly sizable gains for some of these STI component stocks. You might be wondering why some of these stocks have done a bit better than the other STI stocks. What we do see is that some of these names actually have got sizable China exposure. So for example, Wilmar, given that it is one of the largest soybean processing companies in China, it actually saw quite good bounce at the back of improved sentiment towards the Chinese market. And if you notice, Capital Corp, CapitaLand Investment, all of them actually have got exposure towards the Chinese property sector. So once again, having a bit of a bounce at the back of improved sentiment towards the Chinese market, including some of the measures that have been announced to be supporting the Chinese property sector. Okay, if we were to look at the top losers, because the market did relatively well in the past week, so not a lot of stocks that saw a very significant fall. What we saw is Genting Singapore, Yangzijiang Shipbuilding, Mapletree Pan Asia Commercial Trust, Semcom Industries, and ST Engineering. But the losses here are not very significant, with a range of about 0.3% to about 3.3%. Okay. What are some of the key news flow that is driving this share price movements? That is what we'll look at next in terms of the key corporate news over the past week that impacted some of these stocks. Okay, so what we saw is that CapitaLand Escort Trust, they had a preferential offering which closed the week before. And last week, what the trust manager actually announced is that about 65% of the total number of units offered were subscribed for. Okay, we'll look at what are some of the implications of this later. Next, we have Fraser Centrepoint Trust divesting retail mall Changi City Point for about 338 million. We've got Semcom Industries and an entity of Petro Vietnam exploring the development of offshore wind farms in Vietnam. And this is meant for the export of electricity to Singapore. For oil and gas counter, we saw Seatrium signing a letter of intent with Shell for the construction of a deep water new build project in the Gulf of Mexico. So for investors who are always following some of this oil and gas stock, you have seen that Seatrium share price once again did well in the past week. And last but not least, NIO, which has a secondary listing in Singapore, delivered more than 19,000 vehicles in August, which is its second highest monthly deliveries on record. Okay, so how did each of these corporate developments affect the share price? We'll start by looking at CapitaLand Escort Trust. So this is a question that we often get from investors within the investor space in Singapore. And what we see here is that if you recall, CapitaLand Escort Trust announced a preferential offering, and this will allow unit holders the right to buy 29 new units at $1.025 each for every 1,000 units held. So the intention of this is to fund the proposed acquisitions of 3 lodging assets, as well as other asset enhancement initiatives. So what was announced last week is that the preferential offering only saw about 65% of the total number of new units offered actually subscribed for, and the trading of the new units has commenced today on the 4th of September 2023. So what are some of the positives from this? The acquisition and the asset enhancement could lift the distributions per security. The gearing of CapitaLand Escort Trust could be brought down from this preferential offering. And last but not least, what the trust aims to do is to be able to build a stable income stream from some of these longer stay accommodation assets. But in terms of some of the potential negatives, CapitaLand Escort Trust net asset value could fall with this preferential offering. And at the same time, given that we did not see full take-up of the preferential offering, this might potentially limit some of the share price upside in the near term. Okay, so this is effectively what we saw for CapitaLand Escort Trust share price. What you see is that it was hovering just slightly above $1.10 before the preferential offering was announced. So once after it was announced that the preferential offering will be at a price of 1.025, it saw a very sharp decline with high volume on that day. It languished around $1 to about $1.02 during the preferential offering period. This might be one of the reasons why the take-up of the preferential offering might not be as strong, because of the fact that the preferential offering price was above the price at which the trust was trading at during this period. And shortly after, what we saw is that once it was announced that the subscription was not hitting 100%, CapitaLand Escort Trust price actually came down thereafter as well due to concerns about what could happen to the share price thereafter. Okay, so this is CapitaLand Escort Trust, and what we see now is that the price of CapitaLand Escort Trust is now actually close to the lowest levels since the start of this year. Okay, so this is one of the REIT and business trusts that saw weaker performance over the past few weeks. On the more positive side, we have got Fraser Centrepoint Trust. So divesting Retail Mall Changi City Point. Not sure how many of you have been to Changi City Point, but if you know much about Fraser Centrepoint Trust, effectively they own quite a number of suburban malls in Singapore, of which Changi City Point would be one of them. Okay, so what does it intend to use this net proceeds for? It wants to be repaying its loans with some of the loans with higher interest rates. And what the REIT manager has said is that this will reduce the pro forma aggregate leverage from about 40.2% to 37.1%. Okay, so given the high interest rate environment, I think the level of gearing for the REITs is something that a lot of investors are keeping a very close lookout for. So the ability to bring down the gearing level without having to do any rights issue or preferential offering is something that is always cheered on by investors. So this is what we saw for Fraser Centrepoint Trust as well. What we saw in the past week is this very sharp bounce in the share price, and part of it would have been driven by the divestment that was announced, giving some comfort to investors that is able to bring down its gearing and that is less likely to be undertaking, say, a preferential offering or having to make higher interest payments as interest rates continue to go up, say, over the next 6 to 12 months. Okay, next, Sembcorp Industries, having a number of developments in Vietnam. So one of it is that it has signed agreement with Petro Vietnam, looking at maybe exploring the development of offshore wind farms in Vietnam, and this will be used to export electricity in Singapore. So while this is an early stage in terms of the exploring of various developments on offshore wind farms, what we do see is that Sembcorp Industries has been moving its portfolio towards more renewables. So if you look at 2020, the total gross renewables capacity that Sembcorp Industries has is at about 3.2 gigawatts. By the first half of this year, it has grown to about 11.9 gigawatts. And this is driven by various initiatives it took on to be able to grow its renewables capacity. And I guess the initiative that was recently announced in terms of potentially developing offshore wind farms in Vietnam could then further add to the renewable capacity when it is finalized. What we also see is that from about 25% of its total utilities portfolio in 2020, renewables is now about 61% of its total power capacity. So the transition from brown to green has actually been very rapid over the past 3 years. Okay, so what do we see in terms of Sembcorp Industries share price? It actually saw a slight bounce in the past week. It has actually come down from the highs of about $6 when it reported very strong first half results. But what we see, if you notice, last week there was also a very sharp spike in volume towards the close of the market on Thursday. This is because of the announcement that Sembcorp Industries will be included into MSCI Singapore Index. So that also led to a very sharp spike in the trading volume on last Thursday afternoon. Okay, this Seatrium is probably a stock that a lot of investors in Singapore follow closely. It announced a letter of intent with Shell for the construction of a new build project in the Gulf of Mexico. So I think for Seatrium, the order book and its ability to win new orders is something that investors track very closely. And what we see here is that the order book for Seatrium has actually recovered very strongly, together with the bounce in oil prices that we saw, as well as from the merger with Keppel Offshore & Marine. So as of September 2023, It has an order backlog of about 20 billion Singapore dollars. And this is sharply higher compared to the order book at the end of 2022 at about 6.75 billion. So with the latest letter of intent, I think it has reinforced investors' confidence that the order momentum will likely remain strong as the oil prices have actually rebounded quite a bit over the course of the past few weeks. Okay, so if you look at Seatrium, we saw this bounce in the share price in the past week, closing at about 14.5 cents, reaching close to the 52-week high. And I think that is really reflecting the confidence that investors have on its order book. Okay, last but not least, we've got NIO delivering more than 19,000 vehicles in August, its second highest monthly deliveries ever. In fact, it was just in the previous month of July where we saw that NIO delivered about 20,000 vehicles. And this is sharply above what we saw for most of the past 12 months. So I think this is once again giving investors confidence that with some of the price cut for electric vehicles that have come through, it's actually helped to drive more EV sales. And then at the same time, despite all the pessimism about the Chinese economy, we see that consumers still continue to buy some electric vehicles. Okay, so we saw this bounce in NIO share price on Friday after the stronger than expected delivery numbers that were reported for August. But what we have seen is that the share price has come off a bit from the highs. Part of this is driven from the weakness in the Chinese economy and how that will have a knock-on impact on Chinese consumer sentiment. We also saw NIO reporting its second quarter results where the losses were deeper than expected, but the stronger than expected deliveries number has helped to revive some of the confidence once again. Okay, so we have done a recap of what happened in the past week. In terms of what to look out for in the week ahead, I mentioned earlier that the CapitaLand Escort Trust preferential offering units have started trading today on the 4th of September. It's a quieter week because the US will have a public holiday today. But at the same time, what we see for the rest of the week in the US market, we have the Fed Beige Book coming up, which will give us an indication around what the Fed officials are thinking. For those who want to connect with different companies that are listed on the SGX, SIAS has a corporate connect webinar with CapitaLand India Trust happening tomorrow on the 5th of September. And last but not least, going towards the end of this week, we have the China Consumer Price Index that will give us a sense of whether inflation is at a healthy level in the Chinese economy. So with that, I'll pass over to Sunny, who will bring us through a bit more about how do we make sense of some of these indicators that are coming out and what it means for the key stock market indices. Over to you, Sunny.
Okay, thanks, Gerald, for the insightful sharing. I will proceed to share my screen now. Okay. Okay, I think you can see my screen. All good? Okay. So I will start with on the home front. So we saw Gerald present just now on the STI, how STI did last week, which was just slightly above 1% gain. So I think that is an indication that going into the election of the short week last week, we are confident that we will select the correct president going forward. And today we have that confirmation again. STI is still in the green, up about 5 points. So how is the STI chart looking like? So we have a low somewhere on the 22nd of August, and there was a bounce here. There are several reasons why there was a bounce on 22nd of August. Firstly, if you connect the two lows of this year, which happened in March this year, as well as in July, you have a short-term uptrend or a short-term support, a very gentle uptrend that you have. So when we connect these 2 points, we know around this level that probably there might be some kind of support coming in for the STI index. And that coincides with the RSI indicator, which sort of more or less tested the 30-point mark, which is the oversold level. And hence, with the coincidence of both these indication, we had a bounce, and the MACD starts to show signs that the negative momentum is subsiding. Hence, the MACD histogram starts to get shorter and shorter towards the positive side. So to start the week, we now have a positive MACD indication, which means that we may see some kind of positive momentum coming into the STI index in the coming weeks. So for STI index to push up further, to retest maybe the high in June or even some kind of a double top in the April period, then we need the STI index to sort of gain a firmer footing above the longer term uptrend line, which connect the low of October and March as well. So this is the green line upwards, which now is seen at maybe a short resistance for the STI index. But if we have some kind of positive news coming in, like what Gerald prepped you guys for to look out for, and if we get the candlestick of the STI up above this uptrend line again, maybe we can retest the double top that you see over here around the 3,300 points again. So what does the indicator say? Indicator, the RSI is now reading at 51.48, which is very close to the 50-point neutral mark. That means that market is sort of directionless right now. They are looking for a catalyst, and we are looking for the next sign to happen to bring the index whether higher or lower. Okay, so RSI is actually in the neutral territory now. For the MACD, as you can see, the histogram has sort of a peak above the zero baseline. So sort of indicating to us that positive momentum might be coming in. We also see that the MACD line crossed above the signal line, but it's still below the zero baseline. But once these two lines starts to cross above the zero baseline, momentum will start to build up. So do look out for how the indicators perform to track how the indicators, the index might be moving going forward. So key levels that we look out for, support level, like say short term, connecting the low of March and July this year. We have the low again here on 22nd of August. That's around the 3,143 points level, or I round it off to 3,150 points level. The next resistance to watch will be the 16 July high, which is around the 3,277 points level. Now, I also note that the STI index may go into a formation of a head and shoulder kind of formation. So this might be the head kind of formation and the shoulder here. And if let's say we have a push up a bit further, then we have another shoulder on this side. So head and shoulder formation can be quite can be seen as a sort of a bullish kind of a chart pattern forming, and that might cause the traders to come in and support the index further. So, but then this kind of formation is not confirmed yet because we do not have the right shoulder comes forming in yet. So we do look out for that formation coming in, and then we will update you along on this show in the weekly market review where we will update you on the developments on the charts. So next, let's look at the Hang Seng Index. So Hang Seng Index, as we have covered earlier, we have seen that the Hang Seng Index has actually dropped more than 20% since the high that we saw in January of this year. So a lot of negative pressure on the Hang Seng Index right now, mainly because of what Gerald said earlier, the negative Chinese market or the perception of the economy that may not be as good looking forward. So we also see a big jump over here during the last week period since the low on 22nd of October as well, similar to the STI index. And those are the indications that you see on the indicators. We have the RSI reaching again below the 30-point oversold mark, hence an indication that traders or investors are looking at the index might be oversold at this level, hence coming in to support the index. However, when you are looking at the moving averages, which is the lines that you see over here, the black line is the 20-day moving average. Then you have the blue, the amber, and the red line. Those are the 20, 50, and 200 days moving average. Those are starting to point downwards a bit on the shorter moving averages, and on the longer term, it's turning flattish. So those moving average levels could become resistance level if HSI have a rebound. So we see a slight uptick from the 20 days moving average. So that means short term that there is some support coming in for the Hang Seng Index. However, the real test comes in when it hits the 50 and the 200 days EMA level, and that could be a major resistance going forward. So we also can see that there was a short uptrend somewhere forming during the July-August period, but it was broken down very firmly. So that now is invalidated already. But we do see that this level over here, which is the 18,250 points level, somewhere around there, more or less a double bottom kind of formation over here, which could provide a strong support for the Hang Seng Index, at least for the coming weeks, because the double support is always viewed as a strong kind of a supporting chart pattern or a bullish chart pattern. Not sure if it will provide the launching pad for HSI to retest the year-to-date high or even the high that we saw in April, but then this could be a support level for consolidation at least. So looking at the indicators, RSI is slightly 1 point below the 50-point neutral mark. So momentum might be weak, and hence that's why I'm saying we may not see a launch of the Hang Seng Index to the April high, but this could be a consolidation area. At least the indicators are not saying that we are going to have a big rebound yet. So the MACD indicator, the MACD histogram has peaked above the zero baseline, so positive momentum are starting to seep into Hang Seng Index. And we also have the cross of the MACD line above the signal line somewhere towards the end of August. Another indication that the trend or the downtrend might be changing, at least for the short term, and we might see that the Hang Seng Index trend back upwards. So key levels to watch, I think Hang Seng Index is in a range-bound kind of trading pattern, at least from the bottom that you see since the beginning of June. So the key resistance level will be this level over here, this line, which is the 19,900, or let's just round it off to a round number, or the handle of the 20,000 level. That will be a key resistance level to watch. Else, if it's not broken, it will continue to become range bound between the 18,200 or 300 level to the 20,000 level if there's no further catalyst coming in from the Chinese government to support the Chinese economy. Okay, that's the Asia side. I will move on to the US side. So this is the chart of the Dow Jones Index. As you can see, we have sort of a good bounce for the past 1 week at least. And the Dow Jones Index has got back up above this long-term uptrend that we have been looking at. So this long-term uptrend is connecting the low of October as well as March this year. And hence, it has been tested also somewhere in the May period and continues to remain intact at least. So for now, we have, for the most recent test we have was towards the on 24th of August. This also since it may look during then that there's a breakdown of this uptrend level, but it proves to be that this is a forced breakdown. We have a close of the Dow Jones Index firmly above this level again. Hence, this long-term uptrend on the Dow Jones Index is still intact. However, the upside may also be quite limited because you can see that the year-to-date high that we observed in July around the 35,400 or 500 level is the next resistance that we are looking at. So much depends on what will be the data that will be coming out from US and what the Fed will be saying on 20th of September this month, or whether they will pause or whether they will increase the interest rate again. So a lot of investors are looking out for that information, but for now, I think it's still a positive thing for the Dow Jones Index at least. But then we are very close to the year-to-date high, and that can also have some influence with the upper bound of the Bollinger Band at 35,555 points. So there may be a lot of resistance coming in here. So if you are going long, I would say that you will want to wait for a pullback slightly, but of course, timing the market may not be perfect. But I think now the gap between where we can get in, which is the long-term support line in green, as well as where we can see resistance coming in, there's a very narrow gap over here. Okay. So the MACD is slightly positive now. It has breached up above the zero baseline because we have a positive MACD histogram reading, but you can't really see it on my chart over here. So that is just beginning to happen. Maybe at the end of this week, you may see that the MACD line has convincingly breached above the signal line, which confirms another signal that positive momentum is starting to gain strength, okay, towards the end of the week. The RSI is at 51.90, so just slightly 1.90 above the 50-point baseline. So that might tell you that the uptrend momentum, at least if it is going to happen, is likely going to be weak according to the RSI indicator reading, and it's also close to the 50 neutral point mark. So market is more or less directionless right now, range bound, or have a slight positive kind of a sentiment to it. Next, I'll move to the S&P 500. So this is the S&P 500 chart. So S&P 500 has a sort of a two uptrends that I'm looking at. The longer term one, of course, connecting the low of October and March this year, that is the longer term uptrend. And of course, we have a shorter term uptrend connecting the low of March this year and May this year. Okay, so this uptrend was breached somewhere during the middle of August, but we can see that the last 3 or 4 trading sessions, the S&P 500 managed to climb back up above this uptrend again. So I'm not very sure if this uptrend will hold, but it seems to me that the last few closing, traders have been using this as a support to get back into the S&P 500 index. So where's the S&P 500 index likely heading? So we have a mini double top formation over here during the June and the July period. So this might become this can have a change in polarity and becomes a support level for the S&P 500 index if traders would want to get back in. And that is also now the level where the basis of the Bollinger Band is around the 4,448 points, which is the 20 days moving average. So this is the first level of a significant support I will be seeing for the S&P 500. The resistance level, of course, we have the year-to-date high on the 27th of July, and that is at the 4,600 level. So I think S&P 500 being more volatile and the broader index right now compared to the Dow Jones Index do have some risk involved getting back in. Much depend on what kind of data that's coming out. So although we are nearing to the peak interest rate kind of a situation, we still are looking out for data that to confirm that economy of the US is still doing well, and looking at the employment numbers to make sure that the numbers don't really go bad when the interest rate actually peak. So this is the undeciding factor that we have right now. So S&P 500 near the peak of the year-to-date high, around the 4,600 level, now trading at 4,515 points, so 100 points away. MACD is definitely showing positive momentum right now. We have positive MACD histogram, as well as the signal line bridge above, the MACD line bridge above the signal line on 29 August, and looks to be breaching above the zero baseline as well, means continue uptrend momentum, and that could mean that they could use this short-term uptrend line as a springboard or a launchboard to continue the movement upwards towards the end of the year, and thereby you may even likely see a new year-to-date high in the coming months. So the RSI has shown a bit of a slightly healthier or stronger reading than the Dow Jones Index, which is now reading at 58.14, which is 8 points above the neutral mark of 50. So that means that there's quite a bit of some strength in the uptrend momentum that we are seeing so far in the rise of the S&P 500, and that could carry on for the next few weeks, and thereby I would say that we could possibly have a high chance of retesting the year-to-date high at 4,600. And of course, we have the PMI data and the inflation numbers coming in the next 2 weeks in US as well. So do look out for that for further developments. Lastly, I will cover the Nasdaq Composite Index. So Nasdaq Composite Index, being the tech-heavy index, is definitely more volatile than the other two US indices. So we also have a short-term uptrend line connecting the low of March and May period this year as well. It was breached somewhere in August, but then now we sort of have a close above that level. But the close is not very convincing above this short-term uptrend line. So I'm not going to confirm that we are going to use this as a launch pad or a springboard to bounce up further to retest year-to-date high. And I think it will be more conservative for you to look at the amber line, which is the 100 days moving average, which is also have a confluence with the lower bound of the Bollinger Band right now at 13,224 points. That would be a sort of a firmer footing for the Nasdaq Composite Index. Now, this is also the low that you observe somewhere on the 18th of August. You can see over here. I'll just put in an arrow over here. Okay, if the Nasdaq Composite Index were to come down to this level, not only will it use the 100 days moving average as a support, it will also have formed a mini double bottom on the low of 18th of August as well, thereby giving a firmer footing for the Nasdaq Composite Index. So the MACD indicator has been positive for at least the last 4 or 5 trading sessions, meaning that there's uptrend momentum in the Nasdaq Composite Index right now. So I'll not be surprised if we see a new year-to-date high in the coming weeks or coming months. And the RSI have now reached a 58.67 kind of reading. Once it reached the 60-point level, it would signal to the market that there's a very strong and healthy uptrend momentum. Hence, it may push the Nasdaq Composite higher. So Nasdaq Composite, being the tech-heavy index in the US, of course, is driven by the recent AI craze, and of course, NVIDIA powering all the AI developments behind as the chip developer, also have a big impact on the Nasdaq Composite movement. So with this, I think the Nasdaq Composite Index is likely going to do well, similar to the S&P 500, but then the volatility there would be higher. Hence, I would always say to be on the prudent side, do look out for the 100 days moving average, which is also the low on 18th of August, around the 13,100 or 13,200 points level, to look for a chance to get back in. Because of the volatility, there's always a chance that we might get in at a better footing rather than chasing the market right now. So that's all I have for this week technical analysis. Anything else to add, Mr. Gerald?
No, thanks so much for your sharing, Sunny. Very helpful to understand some of the technical indicators to be looking out for. I'm sure everyone has got maybe further questions that would like to be asking us. So once again, do keep a lookout for our weekly market review. And if you've got any questions, do consider joining the SIAS that is coming up, that is open only for SIAS members. And we can have a further discussion about some of the things that were brought up.
Okay, so I think I'll see you again next week on Monday, same time.
Yes.
Yes, okay, and I'll see our viewers again next week. So do remember to tune in and look up for our weekly market review. See you.